Hello and welcome left field investors to Midloch Investment Partners introductory webinar. That's Midloch like the Loch Ness Monster, Midloch, and here's our website, midloch.com. After the webinar, you can visit the site to learn more about our strategy, funds, properties, and people, two of whom you're about to meet. Also on the website, you can join our mailing list to be notified of investment opportunities. Right here, you sign up to stay in touch with us and again be notified of investment opportunities. Now, please meet Andy Sinclair, our CEO and principal, and Tim Donovan, managing director.
Hello, everyone, and welcome left field investors. We are pleased to welcome the Left Field Investor Network and tell the whole group a little more about Midloch, our philosophy, and our investment strategy. With that, before we talk more about Midloch, I do want to have a basic disclaimer here for everyone. And first off, we're not here to sell securities. This is solely for informational purposes. Prior to making an investment, we do ask that you review any type of legal documents prior to making any further investment decisions. So with that, without further ado, let me introduce myself and Tim, one of our managing directors, and tell you more about Midloch. So Midloch, at our core, we are a boutique real estate fund investment manager. We focus on the main property types of real estate, which is apartments, industrial, office, and commercial properties. Overall, we're targeting a consistent 13 to 17% return using a targeted value add strategy. We're going to tell you more about that. Overall, our track record, though, has exceeded our annual returns that we target to hit. We've been able to over double investor money on exited investments. We've been able to earn about a 61% IRR, and all while keeping our leverage in check of only around 54% for our whole portfolio. This is covering about $700 million of assets. So quite good returns overall for Midloch, but we're looking to hit that consistent 13 to 17% annual returns using our value add strategy that we're going to tell you more about across property types. First and foremost, I think one of the most important things about Midloch that makes us different is we've got a highly diversified team. Myself, I've been an investor for a long time. I've been in the real estate industry now well into my second decade. My partner, Rafi Goldberstein, though, has been a lender for the past 2 decades. So it's always important to have diversity on your management team, not just all the same personality. So Rafi's a lender here. And my partner, Josh, if we scroll just a little bit down, Josh has been a developer for going on 25 years. So at the top of Midloch, you've got an investor, a lender, and a developer. So a very good diversity in the management team and how we approach deals, how we look at stuff, and looking to also risk mitigate, limit our downside, but also where we can uncover value to go find ways to make money for you, the investor in real estate. So prior to turning this over to Tim, though, I want to tell you a little bit about our niche inside real estate. Other than having a good, accomplished, and different management team, Midloch, we specialize in what we call small to middle market size deals, or as you probably know them, they're just everyday size deals. So we typically invest between $5 million and $50 million. The reason we do that is between $1 million to $5 million, there's plenty of competition from any high net worth investors. Could be a doctor, could be a lawyer looking to own real estate as a hobby. And on the other side of the spectrum, you have plenty of institutional groups. It could be a Wall Street group like Goldman Sachs, an insurance company, or asset manager like Invesco. There's plenty of those groups out there looking to buy real estate. And frankly, those two ends of the spectrum, they bid up the price on each other. In the middle where we play, which is that 5 to 50 million, it tends to be a little more inefficient. It's too small for the large investors and too big for the hobby investors. And so in that size range, we typically can find good investments, and we know that our competition's a lot less in that size range from other prospective competitors that would be in our space. Lastly, while we think we have a good niche in where we invest in terms of the size, location matters. I'm sure you've all heard the terms location, location, location. In the Midwest, we've got basically, a home market in 3 different areas, and we've invested coast to coast. Now, overall, we've invested a little more heavily in the Midwest where we're based. We frequently call it the Midbest. We think there's pretty balanced supply and demand fundamentals, but we've also invested in other markets that we have strong local boots on the ground operations. As you can kind of see from this heat map here, these are all areas we've invested with our local management teams across the United States. So with that, I'm going to introduce Tim Donovan, one of our managing directors here at Midloch, who's going to tell you more about how we unlock value and some case studies that might be relevant.
Absolutely. So before we even get into that too, it's worthwhile noting kind of where investments as well. Obviously, Andy kind of highlighted our strategy, but one thing that makes Midloch unique is that we really play across a lot of different areas within the investment landscape, in addition to just geography. So as you can see here, Midloch not only invests LP equity, but we also focus quite a bit on co-GP equity, which offers enhanced economics that we pass through to our investors. And then in times where the market has greater uncertainty like today, we also have the opportunity to invest in debt positions through mezzanine financing, preferred equity, or even note purchases. So we have a few different buckets that we invest in all through our value add strategy. And in addition to that, we invest across asset classes as well. Our main focus has historically been industrial and multifamily, though our portfolio also consists of retail, office, self-storage, parking, and other commercial assets. So it provides an opportunity to take advantage of kind of value acquisitions, no matter what type of opportunity comes our way. Now, with that, we do have kind of a very set investment approach that we take. This really highlights quite a lot of it. We really focus on unlocking value through growing the cash flow. And with that, we really focus on 2 to 3 ways to make money and to enhance the returns of the property. In addition to that, we also focus quite a bit on the location analysis. Right, we look at strong markets that have a good balance of supply demand, as Andy mentioned in a previous slide. We're very selective on our deals. Our diverse investment committee, as Andy mentioned as well, we only approve a fraction of the deal flow that we look at. Each deal is approved on meeting a pretty highly selective criteria that we set, and it takes quite a while to sift through opportunities to find ones that we have conviction in. And the last thing that we have on here, as Andy had mentioned earlier, is limiting leverage, right? We really lean heavily into utilizing fixed interest rate financing at lower leverage, because when times become a little bit more uncertain, having extra term on your debt, having less interest rate risk, having stronger debt coverage ratios means a huge difference. And then on the right here, we talked about kind of those 2 to 3 ways to make money. These are a few different options that we have. A lot of times buying distressed properties, buying off markets, leasing up vacancy, investing in the property to increase rents, utilizing green financing. These are just a handful of ways that we really look at with regards to maximizing income at a property. So to get maybe into the weeds a little bit more, we wanted to provide a few different case studies as to deals that we've done in the past. This just shows a handful of photos of properties that we either currently own or have previously owned. So some office, retail, industrial, multifamily. But we'll dive into a few specific examples here. The first one that we have on the list, the Villa Medici apartments and townhomes. This was a value add multifamily acquisition. The funds invested through co-GP equity in this. It's a longer story for another day, but we acquired the property back in August of 2020 in the throes of COVID. We had negotiated a price reduction given market uncertainty, and we utilized our hands-on local management to increase occupancy and to grow rental revenue. Ultimately speaking, we held the property for just less than 2 years and exceeded a 4 times equity multiple on investor capital, which was really a great outcome. In addition, the one below is an example of where we've utilized preferred equity. A property called Playbill Flats was in our Midloch Value Fund 1. This one here was an apartment community that was being totally gutted and converted into kind of luxury multifamily. Well, it was a little bit too much risk for our appetite for a common equity position. We utilized preferred equity and were able to receive a 14% rate of return for our investors. Couple others just to highlight here. Mech One Life Storage or Life Storage Mech One was a joint venture investment that we made. We acquired a vacant industrial building and converted it into a climate-controlled self-storage facility. And on this one, we partnered with the company Life Storage. They were a fantastic hands-on day-to-day operator. They handled all the on-site work as well as leasing. This one here ended up being a very short hold period as well. It was really acquiring the building, changing the use, and then beginning the lease up. This one, we were able to have a 2.2 times equity multiple in just over a year. And then the last case study to dive into today, the Last Mile Pen Industrial. This is another co-GP equity investment. This is more of your traditional value add industrial. We bought it at kind of below market occupancy, below market rents. We were able to sign several different leases at the property with increased rents, almost 30% over what they previously were. We actually, on this one, were able to utilize green energy financing. And we actually were able to negotiate a lot of lease renewals at the property as well. We held this property for about 1.3 years and were able to generate about a 1.64 times equity multiple and about a 44.8 IRR. So those are a few different examples of sort of our strategy in action. It gives a good flavor of our co-GP, our LP equity, our kind of debt preferred equity positions, and kind of covers everything from apartments to industrial to some of our alternative commercial. And I will turn it back over to Andy a little bit, just kind of give a recap of everything and opportunities of how people can get involved with Midloch.
Thanks, Tim. And I think as the group has heard here is that we're focused on our niche of that 5 to 50, or as we call it, our boutique real estate investment strategy. But everything we do has a value add strategy, means we're looking for 2 to 3 unique things that we can do to add money, whether it's upgrading an old building and making it new again, or simply finding creative things such as green financing or growing the occupancy of a building. We're always trying to find things that will help us achieve that consistent 13 to 17% annual return, even though we've been able to achieve quite a bit better over our history here as Midloch. So we hope you enjoyed hearing more about those case studies. To the extent you are interested in possibly investing, we offer 2 different opportunities to do so. We have our individual real estate sidecars and properties that are focused just a single property investment. And then we offer our more diversified funds that have the diversity in co-GP debt positions, as well as LP equity positions across different property types that we are continuously taking investor funds on, invested in a diversified manner, both by property type and location. So different opportunities depending on what is right for you. And to the extent you are looking forward to taking the next step, the best way would be to go to midloch.com, which is MID, which stands for the Midwest, MIDLOCH.com, and get in touch with either Tim or I at the contact information you see on the screen. And we hope we can earn your trust and show you why we might be the right boutique real estate investment manager to work with you. So thank you, everybody, for joining, and we look forward to discussing more with the Left Field Investor Group in the future.